The Reserve Bank believes in the market efficiency of the markets that we have in India for Forex. Accordingly, our interventions in the Forex market focus on smoothing excessive and disruptive volatility. It does not target any specific exchange rate level or band. The exchange rate of the Indian rupee is determined by market forces, and we will continue with this policy. Coming now to liquidity and financial market conditions, I may state that after remaining in surplus from July to November 2024, system liquidity as measured by the average net position under the liquidity adjustment facility did turn into a deficit during December 2024 and January 2025. This drainage of liquidity is mainly attributed to advanced tax payments in December 2024. You are aware there are quarterly advanced tax payments to be made, December being that particular month. For the advanced tax payments for Q3, that did have an impact. Capital outflows, again, one has witnessed some capital outflows because of various reasons.
All right, I'm now joined by CNN News 18's Aman Sharma. Aman, big decisions being made by the Monetary Policy Committee. They have in fact decided to bring down the repo rate at 25% BPS. What does this mean? What is going to be the impact on the fixed deposits, savings and the loans that people are, applied to right now?
See, this is a big relief after the income tax relief which have come in the union budget, where income till 12 lakhs has been made tax-free. This is the second big gift to the middle class. The RBI slashing the repo rate by 25 basis points. So, this is double the good news for the middle class because repo rate, was last cut nearly 5 years ago in May 2020. Then it was made 4%. But since then, the repo rate has risen 7 times to go up to 6.5%. So this is the first cut of 25 basis points, which is coming after a gap of 5 years so far. So RBI giving this big gift today, and this repo rate is the one which leads banks. If there is a rate cut in repo, it leads banks to lower their lending rates. So your home loans could become more affordable. The interest rate on the home loans could go down a bit, and this brings direct benefit, of course, to the middle class, which is taking these home loans in a big way. So I think a double relief coming after the IT relief was given by the government in the budget to the middle class, which the Prime Minister has spoken about in great detail, even on the floor of the House earlier this week, saying how the government is trying to put more money in the hands of the people, in the pockets of the people, so that they can spend more, the consumption rises, and that gives the fillip to growth. RBI now, chipping in also with a repo rate cut by 25 basis points. Overall, good news for the middle class.
Absolutely. So double relief like Aman is in fact reporting right now. I request you, Aman, to please stay with us as I'm also joined by Pallavi Ghosh. Pallavi, after the income tax relief and now repo rate relief for the middle class, this is a huge impact that is going to happen as far as the middle class is concerned, and this is happening after almost 5 years now.
Yes, so there are 2 points which are over here. Repo rates are difficult to change. The RBI goes in by the market reality, and all along, despite a lot of clamor and demand coming in, even from Finance Ministry, that the repo rates could actually be brought down, it wasn't being able to be brought down because of the market condition, the global pressures, and things like food inflation. These are all important benchmarks that are used to fix the repo rates. That's how the way RBI monetary policy really works. But now, if you look at a copy of the economic survey, which we all had put out, it essentially shows a robust economic green shooting of the economy, actually, to talk about the economic survey. But the main focus of the government, both in terms of the economic survey, Shireen, and also in terms of the union budget, has been to boost, one, employment, and second, to increase the expenditure. Because when you buy and sell, the market keeps on moving. Which means that for the corporate sector, it means that more jobs will be generated.
All right.
All of the slash of the RBI's repo rate, it is essentially hoping that, one, the people are able to save more money, they're going to spend more, and more than that, I think it also sends out a message, a powerful one. The economy can afford to go in for a slash as far as the repo rates are concerned.
All right, so good news for people is what Pallavi is, of course, reporting right now. Let me now go back to Aman Sharma on this. Aman, take us through the highlights of this press conference by the RBI Governor Sanjay Malhotra and explain the details and the impact that this will have on ground.
There were various points made by the RBI Governor Sanjay Malhotra. He's also speaking about various other things, saying that the standing deposit facility, which is the STF rate, shall be at 6%. The marginal standing facility rate, the MCF rate, shall be 6.5%. He's also noting that the inflation has declined. So the RBI Governor saying, they're supported by a favorable outlook on food. And continuing, the inflation has declined, and that is why the MPC has, decided unanimously to continue with the neutral stance and remain focused on the durable alignment on inflation with the target of supporting growth. So this has been a big priority of the government, that inflation remains under control, especially food inflation, and that is acting as a fillip to growth. But of course, the highlight is the RBI Governor Sanjay Malhotra saying that the Monetary Policy Committee unanimously decided to reduce the repo rate by 25 basis points from 6.5% to 6.25%. And as the Pallavi was just explaining, this clamor has been there for a very long while. In fact, over the last 2 years, whenever RBI has had this, monetary policy update, the buzz always was that will the repo rate be touched? Will the repo rate be brought down? So far, it had not happened. But finally, I think RBI has taken the cue maybe from the economic survey, which also advocated for the repo rate to be reduced. And finally, the good news for the middle class has come. This could, Sharon, lead to more people going for home loans, people buying houses and going for home loans, because if the interest rate is lower, it acts as a very, very attractive proposition for people to take a home loan. So, that is what the government is trying to also spur more consumption, more spending by the people, so that growth gets a fillip.
Absolutely. So good news for the middle class is what the news that is coming in, of course, from the RBI governor. Let me now go back to Pallavi Ghosh on this. Pallavi, what do you think? Like you mentioned earlier that, this is something that doesn't happen. It's a very rare occurrence. What do you think has influenced this policy decision by the RBI to come out and reduce the repo rate?
See, we also have to look into other fine prints which are really coming in, and why is it that the RBI also wanted to come out with a slash in the repo rate? See, today becomes very significant because politically speaking, today the budget discussion is going to begin in Lok Sabha. The cabinet is all set to come out with a new income policy, which is also supposed to be another feel-good measure from the government because it is very income taxpayer friendly. I remember we were talking to the finance ministry sources that you've given a huge tax relief of up to 12 lakhs, which means amounts around 1 crore people. But how is it that you are going to be then making money from? So what the government had told us then was that we are now planning that we'll try and get more and more people into the income tax payable bracket, which means they want people to earn more, and when you earn more, your personal tax increases, which shows that you are earning, and therefore you can save and you can also spend money. These are going to be the important benchmarks. We are also seeing a lot of outrage which is happening over the dollar is to rupee ratio. There is a huge amount of concern on that. The RBI's press conference also touches upon that. It is also trying to ensure that the exchange rate goes favorable to India. That's one important factor. The second, of course, it's talking about banks. The banking sector, the advice which has been given to the banking sector is don't keep on parking funds. You have to see to it that it circulates in the economy. When it circulates in the economy, it also means liquidity. And liquidity also means your inflation tendencies are put under check. These are very, very important fine prints. Just a repo rate being slashed would mean nothing much, Shireen, if it is not backed up by more liquidity available in the market. That is how the economy keeps on growing, which surges employment, which increases, of course, the consumption patterns and spending patterns as well. Very important decision on a significant day like today, when the cabinet is already set out to come out with yet another progressive pro-people new income tax bill.
And also the discussion on the budget is also all set to be taken place in the parliament on the floor of the house. So it's a very significant day when such announcement is being made by the RBI. Let me now go back to Aman Sharma. Aman, how is the market reacting to this? Is there a possible impact of this decision that can be seen on the shares and the bonds?
Well, we'll have to wait a bit, Shirin, maybe another half an hour to see how the market reacts to it. But overall, there seems to be good news. from the RBI PC. Two more points I will